Welcome back to the Dividend Diplomats YouTube channel, everybody. You got Bert the Hurt and Big L, the Dividend Diplomats. Today, I put together a dividend stock watch list of 3 undervalued dividend stocks to buy. So stay tuned, get ready. I can't wait to talk to you about the stocks that are going to be on my radar.
You know the drill. Smash that subscribe button. Give Bert and I a thumbs up. Bert put together this watch list of 3 great dividend growth stocks here heading into the middle part of April. And I know him and we can't wait just to dive in and talk to you about these 3 dividend stocks.
Exactly, Lanny. You know, it's been crazy, this stock market. This stock market just continues to climb and climb and climb and climb. The PE ratio to the S&P 500 is over 40x. Think about that, everybody watching. 40 times earnings for this stock market when it's historically trading between 18 and 20. Just insanity.
It's hard to find undervalued stocks. It's hard every day when you sign in to your brokerage or you check on Google Finance, Yahoo Finance, whatever sites you use, and you just see green. Usually you want to be excited when you see green, but when you're trying to find undervalued or discounted stocks, you want them to be on sale. You want to see a little bit of red. Hey, stock market, you take it easy,
It's been a few weeks since you've done that, and it's nice to bring it back there. It's a perfect reference, though, because we want the stock market to be red so we can put our capital to work and buy these undervalued dividend stocks. And
how do we find undervalued dividend stocks?
That's easy. We use the famous Dividend Diplomats Dividend Stock Screener using 3 simple metrics: PE ratio less than the S&P 500, payout ratio less than 60%, and third, a history of increasing dividends, which includes reviewing the 5-year average dividend growth rate and the company's history of increasing the dividends. And if we like all the stocks, we'll throw in a bonus metric of the dividend yield too.
Exactly, Bert. And, again, with the stock market pretty much at all-time highs, crushing over 4,000. I mean, again, finding those stocks, let alone dividend aristocrats, could be a little bit of a challenge. But I think Bert was able to really reach back in the bag, put the metrics together and say, hey, regardless of what you see in the share price and in the stock market, here are 3 stocks that you can buy or put on your watch list right now, and you could feel okay about it,
Exactly, Lanny. So that first company is Walgreens, ticker symbol WBA. We just featured Walgreens and CVS in a battle royale a couple of weeks ago where we pitted the 2 drugstores against each other. And guess what the conclusion was from that video? We liked both the stocks. Both the stocks.
Right.
Yeah. Exactly, Lanny. But no, when you ran both companies to our stock screener, things were looking great. Personally, I love the dividend history of Walgreens, and that's why I'm adding them to my watch list. Let me run through the metrics here. Their stock price at the time of recording is $53.30. Forward earnings are $4.67. Gives you a PE ratio of 11.4, well below the market. Their annual dividend's $1.87. So you take that and divide it by the forward earnings. That gives you a perfect payout ratio of 40%. And then lastly, the company's a dividend aristocrat. They've increased that dividend for 45 consecutive years, and they have a 5-year average dividend growth rate of 5.61%. So the metrics look great for Walgreens right now.
Yeah, I mean, can't argue there. I mean, I know people are concerned about the growth of Walgreens, given the competition from CVS and Aetna, Amazon's attempts into the, healthcare and pharmaceutical industry. But I'll tell you what, Walgreens delivering these vaccines. I know that's where I got the first shot, going to get the second shot. I think, Bert, you're the same as well, right?
Yep.
So, I mean, pretty relevant. They're still in the corner of happy and healthy. And again, they're in the corner of delivering you a consistent dividend.
And let's not forget, in the middle of the pandemic last July, they still announced a dividend increase when so many companies were cutting their dividend or pausing that dividend growth. Even though it was only a 2.1% dividend increase, it was huge in the middle of one of the biggest economic shocks we've faced in over a decade.
Exactly. I mean, can't really ask for a lot during the pandemic when you saw companies such as Occidental Petroleum, WestRock, Shell, Armanino Foods, all these other big companies cutting dividends.
You're making me sad here, lady, going through this list right now.
dividend cuts were real. The dividend demolishes were real. Don't even bring up retail. Airlines, obviously. So Walgreens still said, hey, keeping our aristocrat status, heading towards dividend king status, try to stop.
Yeah, so speaking of Dividend King, that's a perfect segue into stock number 2 on my watch list. This company has been the stock I've also been buying 1 share of a week from my portfolio and my wife's portfolio. Check out the video on why we are doing so. That company is Johnson & Johnson, ticker symbol JNJ. Man, am I really liking this company right now at the current metrics. So let me run through them quickly. Stock price at the time we're shooting this video, 162.24, forward earnings 950. That gives you a PE ratio of 17. Their annual dividend $4.04, which is going to be increased during April here in the coming weeks. That gives you a payout ratio of 42.5%. Another company with a perfect dividend payout ratio. They've increased that dividend for 58 consecutive years, and that 5-year average dividend growth rate is very consistent at 6.14%.
It's funny we're talking about J&J, again, a top 5 foundation stock for your portfolio. I know Bert owns it, I own it, my wife owns it, Bert's wife owns it, everybody owns it. You gotta have
it. I bet you all of you watching this video own it.
Exactly. This is a very well-timed piece here on J&J though, because that increase should be coming soon, especially if they want to go toe-to-toe with a Procter and Gamble and their 10% increase. So J&J dealing with the negative press from the COVID-19 vaccine right now, as CDC is researching into the handful of blood clot incidents with the COVID-19 vaccine. So hopefully there'll be a little bright spot for the investors and shareholders out there with a nice kick up on the dividend.
Yep, and that's why I'm not that concerned about this news, because to me, from an investing standpoint, remember this is from a pure investing standpoint, not a health standpoint. This is a short-term news cycle. I invest for the long term. My investment horizon is decades into the future. I am buying and holding Johnson & Johnson for the long run. So to me, the company has weathered plenty of other controversies in the past. So have many of the other companies in our portfolio, and they've still managed to increase their dividend. That's why I'm still watching Johnson & Johnson despite the negative short-term news.
Really like it. Really like J&J. I mean, dividend yield, I know, just tipped below a little bit of below the 2.5%, which kind of broke my heart a little bit.
Yeah, it's still higher than 80% of the people on the Indians batting average right now, because that team is not hitting very well. But different story.
All right. Well, hey, Bert, what about dividend stock number 3? Can you hit the trifecta with 3 dividend aristocrat stocks on this list?
Oh, I don't know, Lanny. Company number 3 is Lockheed Martin, ticker symbol LMT. I know, but they're getting close. They are getting close. We featured Lockheed as well a couple of weeks ago, and I still like the company. I like them then. I still like them now, even though their stock price continues to climb since we started.
Did they jump like $14 since that video?
It's insane. I can't believe they're about to cross 4. Look at, I'm putting up the stock chart right now for everybody to see. Just look at this astronomical stock price. But guess what? That's why we look at the metrics here. That's why we perform the research. Lanny ate that colon blow this morning. That's what that was for. So let's go through the metrics here for Lockheed Martin. Stock price is $391. God, Lanny, you are right. It did go up $14 since that video. Forward earnings are $26.31. That gives you a PE ratio of 14.9. Their annual dividend is $10.40. With that EPS, it gives you a payout ratio of 39.5, just below our 40 to 60. I'm counting it. It's a perfect payout ratio to me. You round that sucker up to 40%. They've increased their dividend for 18 consecutive years, and they have a 5-year dividend growth rate of 9.7%. So the metrics check out here for Lockheed Martin to me.
Actually, I'm happy you brought up Lockheed, because we're talking about almost a $400 stock. But the best part about this is that don't let that scare you. You should really be looking at what that price to earnings ratio is, because they trade on earnings, and they, analysts are expecting $26 in earnings per share. So though they have a $400 share price, they're actually more undervalued potentially than J&J.
Yeah, how insane is that? mean, again, remember the S&P 500 is trading at over 40 times earnings. So clearly, this company is undervalued despite that rising stock price. And why is that stock price rising? Because of what Lanny said. Because their earnings continue to grow. It's insane. That's why we look at the metrics. We don't look at just stock price. We look under the hood and look at those metrics.
And Lockheed Martin, in a pretty safe industry right now, being a large component to the U.S. defense industry, and I don't think that'll ever go away. And Lockheed continues to win hundreds of millions, if not billions, of contracts throughout the year. So, their business model, as long as the U.S. government is willing to have defense, stands to do very well.
I think history would say that they're going to be doing just fine, and we'll get ourselves to that aristocrat status here based on the growing defense budget.
That's the ticket.
Yeah. Well, on that note, I think just to summarize here, I'll put up a chart showing all the metrics. The three companies I'll be watching are Walgreens, Johnson & Johnson, and Lockheed Martin. Currently, I only own Walgreens and Johnson & Johnson. I do not own Lockheed like Lanny does. But hey, this may be the week, this may be the next couple of weeks where I finally initiate that position with that big $400 investment to get one share of Lockheed Martin.
Again, Bert, when I look at these three stocks, from my standpoint, I like both of them. Walgreens actually has had less of a comeback to their stock price, I believe. Trade at only at $53. Pretty good payout ratio, well above a 2 times the yield of the S&P 500. Really curious on Walgreens. Could they be a comeback hit here from a business standpoint?
We'll have to find out, but hey, they're undervalued today, and that's what matters, and that's why I'll be watching and buying them. So everyone, let me know what you think of the three companies on my watch list here. Are you going to be watching them as well? Maybe buying 1, 2, 3, or none of them? Please let me know, and then also let me know what other companies you are watching too.
Yeah, who's swinging for a triple here? Who's bagging all three? Let us know. Who's getting singles or doubles? We would love the feedback to hopefully hear from you guys that this actually added value to your investment analysis and strategy of what you're doing. Bert, great watch list. You kind of got me excited for the next few weeks. Hopefully these stock prices stay at the prices or go lower.
Yeah, let's hope, cross our fingers and hope for some red in the morning so that we can start buying some of these companies.
So yeah, that was Bert the Hurt, and you got Lanny. We are the Dividend Diplomats.
Over and out.